What's up? What's up? Oh, I need to move my mic. I had it up in the air. I had it moved so I could prop my feet up while I was studying some ICT last night. If it's quiet, please somebody let me know. Don't hesitate. Oh, it won't bother me. Good afternoon, Denis. We just called this trade in Playbit on Bitcoin shorts. Moved pretty nicely. Hit one of our targets already. We de-risked, stops to break even. I'll go over this, and I'm going to go over 2 trades I took on the NASDAQ this morning. One of them resulted in a win, and one of them resulted in a loss. And we'll go over both of them so that way everybody can learn from it. Give me 1 second. I'm typing something out. So I'll start off with Bitcoin. So I said in chat, I don't know, it wasn't like an alert, but I said that I wouldn't really pay attention to crypto until one of 2 scenarios. And that was until it got under 17,593, which is the weekly draw on liquidity that we gave on Monday, or it came above these equal highs. Now, ideally, whenever we're looking at a bearish week, we're going to look for a false swing early in the week. And that's on all assets. Crypto is a little fickle and finicky, and that's just different, right? Crypto is like the kind of like the ugly stepchild of trading at this point, in my opinion. That's why I try not to trade it until I get higher time frame setups, because I don't think that it's worth trying to trade every day. Now, what I was looking at specifically was these equal highs right here. So the F.O.M.C little spike we had down here, originally we wanted a power of 3 scenario. We had this accumulation, manipulation, and the distribution of orders, but it didn't clear out the main high that we made in that previous range. And then this, the high we did make, it just kind of made like an equal high. So I think whenever you have that scenario, you're going to see a lot of people try to short. Everybody is going to try and look at this like, oh, resistance, we're breaking down. We're not going back above that Bitcoin, 20,000 is a wall. So what that does is it induces a lot of uninformed money to become liquidity and order pairing for smart money. So if smart money is looking to sell, they're going to look to do it where they have buyers. Where are they going to have buyers? Above old highs, above equal highs, right? We already know smart money sold from this area once. Over here, we have an order block. And once price comes above these highs, we're reaching a liquidity pool where there's a ton of buying interest. That's why it's called buy-side liquidity. So whenever we have that kind of scenario, we're going to see price usually react. Now, we don't just short above the highs. So after we clear those highs, it's funny, I actually saw this last minute. We could have got a little bit of a better entry, to be quite honest. But after we come above these highs, we look for this. Now, there's a lot of different terms for it. Just you could look at it as a 3 drive, sliding a little bit more. What I look at it as is like an original consolidation, second consolidation, stop hunt, and then we get this impulsive break of structure. So now here is where you have that framework, right? Up until now, we only have an idea, if you will, because we've came above the high. We're at our area of interest. Now, a lot of people will FOMO in and they'll look, they'll rationalize every little down move as, signal to short. So they might short here. Guess what happens? They get stopped out. They might short here. Guess what happens? They get stopped out. Now, why do we wait till right here? So notice the difference here. The movement down here is very lackluster, right? Price is moving down, but there's no emphasis. You don't look at this and say, hey, a market maker caused this, right? You look at this and say, okay, that's a pretty big push, right? Now, it's not as clean. It has a lot of stuff like indices will give you a little bit cleaner of price action. For instance, right here, we had a tiny gap and price came and almost took out this little high. So it's a little, again, it's crypto. You have to take everything with a grain of salt. So now, whenever we look at the range we're in, so I use the 1 hour a lot because I day trade. So when I'm looking at the range that we're in, to me, it was from this low up to the high we just made. Let me delete some of these boxes. I don't like having so much marking on my chart. So whenever we see price move impulsively away from, God, who is texting me? Holy shit. Whenever we see price move impulsively away from an area, we can look at that as an area of institutional sponsorship. So the key here is really identifying what the higher time frames are drawing to, and then looking at it in that context. Looks like we're about to get TP2. But we're looking at price in the context that, up until this point we just got, it was drawing to these highs, right? The early week was drawing up to those highs. So after that, we meet that. We're going to look at this as our range on the 1 hour, right? So it looks like TP2 just hit. Let me send an alert to the group. Not everybody's in the stream. I'll take 50% off of it here. Go ahead and alert this really quick. Nice trade. Now, again, the reason I'll probably leave a runner if this full TP is hit, just because the weekly draw for me is going to be these lows. And I think that we have to have that little impulsive move up before we have the move down early in the week, just like we look at the power of three whenever we're talking about intraday, where we see that move down or move up at midnight. And we oftentimes see an opposite move for the true move of the day. Just like that same concept, it's just accumulation, manipulation, distribution. So if we're looking at our week, we're going to see accumulation on Monday, manipulation Tuesday, and sometimes Wednesday, and then the true distribution down to where market makers are trying to push their books. Because when we look at this range, we're in a bearish range, prices rebalance to a premium. So of course, we don't know anything for certain, but we can look at this as market makers are probably net short here. So if they're net short, where are they looking to push price to? They're going to push it down, right? So they're going to push it down under this area of sell side liquidity so they can pair orders, right? They're going to end up dumping off shorts, and they're going to look to potentially build some longs around that area. We don't know that until it gets there, just like we didn't know that price was going to react to this buy side liquidity until we got this. So again, whenever we're looking at potential liquidity rates, it's a very simple model. We just look for price to come up into our area of interest, and then we look for displacement to the downside. Now, I will say it's good to see, we see the initial lick rate. Very rarely is it this shit's sliding, but very rarely is it the first candle, especially in these higher time frames, that you're just going to hit it and it's going to move down. No, smart money is going to manipulate price, and they're going to let people think that we're breaking out, let people think that we're holding above a level, because there's buying, retail's buying. Now, guess what smart money is doing? They're covering their longs and they're entering sells. Hold on 1 second. Yeah, everybody should have stops at entry at this point. No reason not to. Beautiful trade. Now we got in right at the last second, and that's always fun to get a trade that moves this impulsively away from our entry. But that's pretty much it on Bitcoin. Now, do I think it has a good chance of going lower than this TP? I do, but I'm going to take most of my profits there just because it's my, I'm looking at the 1 hour. That's my main time frame that I'm basing my ranges off of. So if I look at the 1 hour, we have price here. We have sell side liquidity. So we can mark that up. I try not to mark stuff up too much unless I'm showing. But at this weekly open, we moved pretty aggressively away from early in the week. Again, we're talking about that accumulation on Monday, manipulation up into where? Buy side liquidity. Then we look for distribution because our weekly draw is down here. So whenever we have this kind of scenario on the 1 hour for me, here's our sell side. Now here's our new buy side liquidity. I draw a fib so I can get my premium discount. And whenever I trade from an external liquidity point, I target internal liquidity. Right? Where am I going to target internal liquidity? Close to equilibrium. So I use this imbalance fill right here on the 1 hour. 3R is a beautiful trade. You can always leave a runner since the overall weekly bias is bearish. It's totally fine to leave a runner. Also, I just now saw the comments. Yeah, I appreciate you guys coming through. If I do streams every day, Monday through Friday, I'm here every day, and I'm trying to keep it a more consistent time. It's going to be noon every day, but Friday, and then Friday is going to be 4 p.m. and those are both Eastern time, New York time. So I'll go to NQ and I'll recap this morning price action. So 1 win, 1 loss. The morning trade. So as you guys that are in the server know, we have a whole class on this exact model. We just did it this past weekend. But whenever I was looking at the NASDAQ this morning, and we'll just put a mark for 9:30 a.m. because that's when I look to start trading. I don't trade before it. I just don't even entertain it. So whenever we see the market move impulsively up in the morning, so we see the open, market moves up. Guess what that's going to induce? That's going to induce people to want to buy because everybody looks at a pump on open as strength. Now, go back and test most of the time, not always, most of the time whenever we have a big pump like that on the open, we're going to see a reversal, especially if that pump on the open is against your overall narrative for the higher time frame. So again, just like Bitcoin, the weekly drawn liquidity is going to be down here at this low. So what does that mean? We're going to look to see the daily move to the upside the first 2 days like it did and manipulate traders. All right, guess where we want? I wanted to go this daily imbalance here. But if we look at ES, it did hit the daily imbalance and reacted extremely rough from it and the previous daily high. So sometimes, NQ is the smaller of the two indices, or well, there's 3 indices, but has less companies in it, I should say. So once we come up into, again, we're marking it this range, right? Where do we move the last? We had this range here, bam. Now we move really impulsively from here and here. So that gives us a trading range. So if we're bearish, we look for price to come up into a premium, clean out internal liquidity, induce traders to buy before we go short. So when we look at the morning, and I'll just rewind this a little bit so you guys can have a view of what I saw when I come to the morning. Ignore these little boxes, but I see a lot of buy side liquidity above this high. Right, that's our previous daily high. Always going to be liquidity above the previous daily high and below the previous daily low. So if I'm looking for price to travel up into a premium, I'm going to see, where there are possibly institutional orders and where are retail traders looking to buy. So I see an imbalance here with a high above it. We also have a high here, a lot of liquidity there. Traders are going to look at that as breakout levels. So when we come into the morning, what do we expect? We're going to see where both ends of liquidity are because eventually I wanted price to push up. Now, let's say if we rated these lows first, that doesn't mean I wouldn't long up to where I want the market to reverse because I look at it like the market still has that internal liquidity in a premium. Market makers are going to go clean that up. They're going to fill all those orders and manipulate retail as much as possible. So we wait for the open, and as soon as we get the open, massive push up. right into the POI we wanted. And this is why it's important to build that narrative before the opening bell. So when we look at the 1 minute, because this is what I use for execution on indices. So we see a push up, small little consolidation, stop hunt, which is going to be our manipulation. Now, we only had one break of structure here that I would consider. You could look at this as a shift in structure too, massive displacement. Now, I wasn't going to take the trade if price didn't come up into this imbalance. I didn't catch the top because this happened very quickly. But when I'm looking at the 1 minute, I see a shifted market structure that is agreeing with the higher time frame narrative, where we're at the top of this range. We've taken out buy side liquidity. We're at an area where institutions likely have orders in that imbalance. Now, why these imbalances? Again, simple premium and discount. I think this actually was an optimal trade entry too. I didn't. Yeah, it was. So actually right at optimal trade entry. I didn't even look at that, to be honest, but that can also help. So whenever I am coming into the market and I see that, I'm going to take a sell, because this is indicating me that smart money is selling to those buyers. There was indeed orders in this imbalance. So price came down, took the low with displacement. Now this is key. See how much of an animated move this is. It's undeniable. Imbalance, we waited for it to come up to the midpoint of it, enter to sell. Now, why did I only target these lows? Well, kind of asking myself that now, because I could have held these shorts through the whole day, but it's all right. It's totally fine, right? It's not a problem to miss out. You can always learn from it. And the reason I targeted these lows was because, I look at it like, okay, we haven't tapped the daily imbalance yet. This green box up here was a daily imbalance that I wanted us to tap. Now, I look at this as a liquidity pool. There's going to be a lot of stops down here and a lot of people looking to short. Guess what's right under it? An imbalance. So I wait, that's going to be my target. Price hit it very quickly. Very satisfying trade. In and out. 2-to-1 risk to reward. Got a little less than that because my market fill wasn't great. You can see how quickly price moved, but that's all right. So I saw price come into this liquidity pool, into the fair value gap. What did I see there? Same little pattern, right? We had a breakdown of a low, quickly came up and took the high, left the fair value gap. So I look at that as an entry. I got in right here, and I wanted to target the daily imbalance because I wanted price to move up higher. Now, one thing that I did fail to realize was that ES, by that time, had already tapped into its daily imbalance. So there wasn't much of a reason that there was, NASDAQ doesn't have to do that. Just because just because one indice has an imbalance or a draw on liquidity, if the other indice has something similar and it meets it, sometimes that can, draw the other one down. So whenever we go back to NQ and we look here, now this trade could have still been a profitable trade. And I always try to recap. Like a loss, it can fuck your psychology up if you let it. It does me sometimes. Like for instance, yesterday I got stopped at break even on an ES long that ended up running to full TP. That shit made me, highly upset, where I wasn't a happy camper over it. But, I went back, learned from it, and moved on. So with this trade, I look at it as it was a good trade, but the targeting was off. As with most of my trades that I take that end up being break evens or losses, my entries are usually good, but it's usually the targeting. But now I can see clearly what happened. What I should have targeted was when we look at this impulsive move right here. This was our 1 minute range right here. So I could have looked, where are some targets at an optimal trade entry? Well, I could have been a little conservative and used the bottom of this 1 minute order block. That wouldn't have been the greatest risk to reward, right? But 2-to-1, that would have been a good trade. Looking back, okay, that makes sense. That could have been a full target, because everybody thinks you got to hit 15R to make money. I'll tell you right now, when I passed my challenge to get funded with a 300K account, I was trading 2R every trade, right? Now, I do hit more on indices sometimes, but there's nothing wrong with consistently hitting 2R. Now I look back, it was a counter trend trade. I was trying to, take it to the daily draw on liquidity, what I thought it was, but I kind of failed to evaluate ES. I failed to take profits how I should have, and it ended up being a loss. I didn't take any profits on it, didn't break even stops, ended up just being a 1R loss. So at this point, up 2R, lose 1R. So still up on the day, no big deal. And that's all she wrote, it seems like, for indices. Now I think that NASDAQ is going to be drawn down to this weekly low, which is the one we talked about before, because the overall market structure is bearish. We look at the weekly range. We've got price coming back into a premium, doing what? Clearing out equal highs, filling an imbalance. It's the same thing, the same concepts we're using on those lower time frames. We're going to use them on the higher time frames because price is fractal. So if you can layer that and help it build your narrative, you're going to have a clear direction of where you're going. Somebody asked, somebody said, first of all, I'll get to most of these questions here in 1 second. The fib settings, I have a couple different ones. So this one is this right here, just the 1, 5, and 0. Then for the OTE, which is, I'm pretty sure, probably the one you're asking about, it's the 7.9, 7.05, and 6.2. Somebody said, look at Bitcoin. I'm seeing my P&L. I have my phone open. That's my chart right now. I'm just kidding. That's a bad habit. That was a joke. Don't do that. Yeah, very nice move, guys. So somebody said, sir, do ICT kill zones work in crypto? Yeah, 100%. But here's my advice with crypto. Coming from somebody that started trading heavily crypto, I highly advise that you don't place all your attention on crypto day trading. I think it's a huge waste of time. It's a waste of talent, and it will lengthen your learning curve, because a lot of the stuff that works very well on more traditional assets, especially some of these smart money concepts or some of the advanced ICT stuff, it doesn't work as well in crypto. Now, it will work, and everybody has 2020 in hindsight and can go back and find all the perfect entries. But I'm telling you, from someone that, like, I know what I'm doing, and I'm least consistent on crypto. So I don't focus on crypto that much. Now, if you're looking at kill zones, go trade Forex, go trade indices. Don't focus all on crypto. I tell everybody this, and I promise you won't regret making a switch to focusing intraday on something else. Now, crypto, again, it gives good setups, but for me, it gives good setups whenever we have the higher time frame setups, a daily or a 4-hour. Build your trades around that. You really don't need less than I didn't use anything other than a 15-minute to execute this. Well, I mean, I use a daily chart and a 15-minute chart. That's literally it. And I've found the best trades I hit on crypto lately are using a 15-minute, maybe a 5-minute chart. You don't need to get the 1-minute entries and all that on a crypto. It's so frustrating because they're so fucking inconsistent. You get really high risk to reward, but I used to trade before I was funded. I traded a strategy where it was focused on high risk to reward and focusing on, hold on 1 second. Sorry, excuse me. I hope that wasn't too loud. But it was focusing on, 15R, 10R. And we were hitting them. Hell, we called quite a few of them in chat. But whenever you're trading with a larger account, like a funded account, it doesn't make sense to me. It really doesn't, because you're going to take with that kind of strategy. For instance, you could have a 20% win rate, and if your average risk to reward is 10, you can make a lot of money. But that doesn't work as well for me on a funded account. For one, let's just say your system is a 20% win rate. That means you could take 8 losses in a row without taking a win, which would mean you could come within 2 losses of losing your whole account if you're risking 1%. That it doesn't make sense to me, right? It's stressful, especially with bigger numbers. I promise you, if you take 8 losses in a row, unless you're just like the god of psychology with trading, you're going to have some psychological barriers that you're going to hit. I don't care what anyone says. I really don't. I've been doing this, quite a bit, and everybody likes to flex 25R and 100R, because people that are new to trading, they ooh and ah over it. But it's honestly, in my opinion, great for very small accounts, or it's other than that, it's really just a pipe dream that a lot of these, gurus will teach. Yeah, everybody's hyped in crypto chat. Let's get it. Yeah, I'm happy that worked out so nice. Yeah, we were actually talking shit. I was talking shit about crypto, and like you guys can tell, I'm not the biggest. I don't focus too much on crypto, but I was in crypto chat like, yeah, Bitcoin. And then I was like, we were talking about it, and I was like, oh shit. I looked at it, I was like, it looks like it's finna slide. I was like, this, because I didn't have an alert. I had these equal highs marked. And I was like, I'm not touching crypto till we come under 17.5 or we go above this 20K mark right here. Is like 20,100 something. And I looked and I was like, oh wait, shit, it's there. And then I was like, wait, and you can see, like, we'll go to the same 1 minute model that I use. Look how much clearer this is on indices. Very clear, right? Now, if you can conceptualize it and look for the same components on Bitcoin, you can see the same thing happen right here. But does that look as pretty to you? It doesn't. It does not. It is not clear. It comes up, almost stops you out. It's just not as clean. It's just that simple. Somebody said, I have a problem with trade execution. Is it a psychological problem? Yeah, for sure. I think the only way to overcome it is you have to build a system. So for me, I only trade liquidity rates. On Bitcoin, I only trade a 4-hour or daily liquidity rate, and I use a 15-minute confirmation like this. And on indices, I trade 15-minute liquidity rates, and I use 1-minute confirmations. I only trade between 9:30 a.m. and noon, and then I stop until 1:30, and I trade until 3. See, and on top of that, I risk 0.5% of my account. I won't put stops to break even on indices. I have a whole little rule set that I follow to where it's very dialed, and I continuously refine that edge. So when you have an edge like that, it's very easy to analyze your trading. And if you go back and see, okay, like for instance, I got stopped on a trade at break even on S&P to watch it fly to my full target. Well, not the full target, the second target. So when that happens, I go back on my journal and I say, okay, 5 out of the last 6 trades that I got stopped at break even, they all went to a TP. So I say, okay, how do you fix that? And I refine my edge, and I consistently do that. So to answer the question, you need to find an edge, and you need to prove to yourself through data that it works. Because once you have that, you're able to, if you can be logical, and it's sometimes hard because trading can be very emotional, but if you can look at it and say, okay, I know that 3 out of 5 times I take this model, I win. Well, if you lose 2 times, it's not going to hurt you as bad because you know that your next win's coming. Now, I think that time is very important, because if you look for the same setup at 2 in the morning and 1 in the morning and 12:30 at lunch, it might not be as consistent, and it takes some time. It takes work to build a system like that. It's not necessarily very easy, but I promise you, once you do that, it becomes much, much easier to execute relentlessly, because you don't care to lose, because you know that at the end of the day, you're winning. You got to look at trading the same way that a casino looks at blackjack. And I don't mean gambling. Note that I said the way that the casino looks at it. When a blackjack dealer deals a hand, he deals every hand the exact same way, because they know the odds are they're going to make money. So if you know that the odds are your trading will make money not over one trade, but after a series of trades, then you won't have problem taking a loss, because every trade is separate. And you continuously, ball up all these trades into the end of the day or the end of the week or the month where you come out positive. You might go through losing streaks, right? But the death cycle of traders is when, let's say if you have a 50% win rate and you take 1 loss, then it scares you and you won't take the next trade that would have been your other 50%, your win. So when that happens, you just miss the win. Now you take another trade, you take a loss. Guess what? After that, you're scared to take the next win. Then after that, you just get so frazzled that you start straying away from that strategy, and now there is no plan. And if you fail to plan, then you plan to fail. So that's the death cycle that new traders go through. And people think that, a lot of times some of the stuff that I say, it's like an old man telling a kid to wear a helmet while they're skateboarding. I'm not telling you that for that reason. I'm telling you because that's how you make money. It's being like that. Or you're going to be a boom and bust trader where you make a lot of money and then you lose it all. So he said, do I have any psychological recommendations with paper traded setups doing really well? Really refining a strat and studying relentlessly. Don't know to be glad or annoyed at myself on missed cash. Okay, fuck the missed cash, bro. The market's always going to be there. What you're doing is the right thing. Like, you're building confidence in your system to where you can actually get that money. Because let's say you took these trades without paper trading, odds are you probably wouldn't have held them to the TP. You may not have executed them the same way. There's a lot of stuff that's different whenever you come into the live market. TP hit, boom. That's what I'm fucking talking about. Leaving a small runner on it. Okay, 1 second. I got an alert. So, nice.
Great, bro.
Hell yeah. That shit was fucking clean. That's been the first that I've hit on Bitcoin like that in a little bit. So that was nice. Not a bad day. Not a bad day at all. Also, I appreciate all the love, guys, in crypto chat. I haven't looked at all of them, but I have 15 notifications, so I know everybody's getting paid off this. Yeah, and for those that are watching, we gave here. I'll show you guys because I know a lot of people that are on social media and shit are just bullshitting. But you can see we gave the trade right here, right? We got in right there. I was at 11:27. You see the time, 11:15. It was. Let's see where he actually it was right there. I think in this candle. So little to no drawdown. Very efficient trade. We're leaving a small runner just because of the reasons I gave you guys earlier. And if you guys want, you can get a free trial just so you can see what we're about. All the stuff, the info's in the bio. So just hit that up. And if you get in here, just at me so I know you're from the stream. Yeah, no problem, guys. I appreciate you too. And literally, again, all I did here, the only thing I did, I waited for my narrative to play out. I said there's going to be stops here. Price got there. Now what? I watched for signs of reversal. What is that? Displacement and shifts in market structure. So if you notice, we actually rated liquidity not once, but not once here, not twice, but 3 times. So it's going to be a 3 drive. Now this pattern, ICT came up with it. Basically, what it is if you see, let's just say you have your higher time frame POI, which is going to be this line. Now this can be, POI. A lot of people think it's just supply and demand. This can be, an old high, equal highs, a breaker block, order block, mitigation, you name it. whatever you have that is an area of interest where you have that framework. Because trades, you need to have a two-part process. You need to have your higher time frame where you have your idea and your framework. It's building the narrative, but that's not enough. Then you need the lower time frames to give you your trigger or your execution. And as much as you can simplify those two things, it's going to help you even more. So oftentimes you'll see a 3 drive. This one, the first drive took it, but sometimes you'll see something like this. 1 move up to it, 2 move, 3 moves, and then displace and break a structure. So when that occurs, we know that smart money is manipulating this price. So looking like price is moving up, it's showing strength. We're going to break out a resistance. And then what? Again, all those buyers that buy breakouts, they get absolutely decimated because smart money is using them as liquidity. Smart money is going to open huge positions, so they're going to need huge amounts of buyers. So they have to engineer those narratives to where people want to buy. So people buy, smart money sells to them, and then the true move begins. So look out for 3 drives on the lower time frames, on the higher time frames too. For instance, look at Bitcoin daily. If you guys have been around for a while, you know we talked about this for quite some time. Push up, 1, 2, 3 drive. Where was it at? Into equilibrium of the range and a fair value gap. This happens on everything from a 1 minute to a weekly chart. Now, I think kind of what we talked about on the weekly bias stream is playing out. We said, it was, I know I kind of gave, 2 potential scenarios, but what I wanted was either the weekly low to be taken and have 2 bearish days and then a bullish day. But what we had that weekly low taken, but then we saw a push up. This is where it was taken. It was way, way over here. This low got smacked on that. Not the one that just happened, but this right here. So then what happened? Price then moved away from it very quickly. This is in the afternoon session yesterday. So whenever we have 2 buy days where we move above the weekly open, right? And then let me show this infographic to you guys. So this will be a better a little bit better visual. So when we have this daily candle formation, now this happens with the weekly, this happens with any time frame. Literally everything has the same thing. So whenever we see this New York midnight opening price, this goes for the same as the weekly open. We're going to see an accumulation, and then whenever we see a push away from the opening price, if we see a push down into a price delivery array, which can be order block, breaker block, old low, equal lows, any again, it's POI, right? A lot of different terms, but any area where you start to build a framework, you see price move away. It manipulates traders into a false narrative, and we see that shift. This is the same thing we were just talking about. Shift, leaving a fair value gap. Here's your best probability, right? Low risk trade, because if you go lower, then you are wrong. This often happens during the London session. If we're talking about the daily candle formation, or if we're talking about the weekly candle, you're going to see it happen on Tuesday during the London session. For indices, a lot of times it happens during New York on Tuesdays because they're more active. And then you see the true move of the week going towards your draw on liquidity. So for instance, with this example, we had the weekly open, a little choppy, but we moved above it 2 days in a row into what? Higher time frame POI. And then boom, right off of it. Now, NASDAQ, it's getting close to these lows. This is where I think the NASDAQ draw on liquidity is still far down here. Now, I didn't hit the gap that I wanted it to. That's okay. ES and NASDAQ move very similarly. So if you see something happening on NASDAQ, you can kind of, you don't want to just blindly enter a trade based off of that on, the sister index, but you can use that as your confluence. Somebody said, trade from Uganda. We are on, though. We missed that entry for Bitcoin. No, in the chat, we hit it. In Playbit, we got on it. I didn't call it on the stream, but this is where I called it right here. Shorting Bitcoin here, levels posted right up there. Somebody said, going to take my advice and look at indices. Can I please have a broker recommendation? If you're still trading, go do a FTMO trial, not the challenge. Go on FTMO.com, make an account, and do the trial. because it gives you the reason I recommend that is, for one, it's paper trading. For two, you get to have an idea of what a large account, how it feels. And then you can also use their account analyzer, and it'll tell you a little bit more about your daily loss, your daily win, all that good stuff. So I think that's the best method of paper trading. They only let you have one every 16 days, I think, but you can make another email, and there's ways around waiting 16 days, or just stay on that one for 16 days, But I'm saying if you hit a goal, I can't remember if they cut it off or not. But yeah, beautiful morning. Holding the runners on Bitcoin all the way down, probably towards this weekly low is where I'll hold them. See, if you guys have any questions, see what DXY is doing, actually. If you guys have any questions, any coins, any assets at all, whether it's Forex, could be fucking soybeans or orange juice futures. If you have any TA you want me to do, I'm pretty much done with everything I wanted to go over today. So feel free to throw something out there. Don't be shy. Holy shit, I'm glad I left the little runner. God damn, that's crazy. I fucking love MetaTrader. XRP. I actually just got an alert for XRP, I think, while we were on here. It's in the daily imbalance. This is what I thought it was drawing to this week, or not this week, this daily candle. I wanted to draw up here. So let me look at the weekly. Now, when we look at the weekly on XRP, I think I have a better chart. Oops. There we go. So when we're looking at the weekly chart on XRP, this is an interesting one. Now, I'm going to start off by saying I'm just calling this how I see it. I'm not trying to be an XRP moon boy. And I do think the economic situation of the world could affect this. But when I look at the XRP weekly chart, this is the impulse move I think we're still in. And this is all the way back from whenever XRP ran at the end of the last bull run, before everything died. On the weekly chart, that is the range we're in. So I look at the weekly institutional structure, not swing structure or market structure, but the weekly institutional structure where I see levels of institutional involvement. I see it as bullish still. So the reason for that is just simply, here's our low and here's our high. And if you see, we pushed up above this high over here. Now, this over here is just madness. You could say that, this was still the institutional structure. And I mean, the TA wouldn't have been wrong. People would have said you're crazy. Let's just say, you went from here to here. I need to redo it. Okay, what did price do? It moved up, then what? It moved back to a discount and did what? Cleaned out all the internal liquidity. Literally all of it. Everything down there. So then what? Price, after it takes those lows, smart money steps in, buys those sell stops, and pushes price back up. Where? To a premium. So over here, we're looking at, I'm not going to say it's going to be the same, because we already did we pushed up, came to a discount, or returned to a premium. See, again, we're clearing out liquidity, right? Price came down. What did it tap into? Weekly order block. Right, they recapitalized it on that second run, expansion. Where to? Fill an imbalance. Then where did price go? To equal lows. What did price do under equal lows? Seems like it wanted to accumulate orders. We had a displacement, so it could have been just pushing back up to this displacement. But when I look at this range, I see quite a bit of liquidity still at a premium that hasn't been swept up. We've got equal highs with an imbalance right above it that was never mitigated. So if I were looking to trade this, for one, right now, this weekly closure is going to tell us a lot. Like if this weekly candle engulfs all of this gap right here, and there's no fair value gap, I would say we're going to reach down for this low. Now, if it doesn't, and we leave a weekly fair value gap, I would look for price to trade early next week into the fair value gap, get that first 2 days of manipulation, and then I would look for higher. And I'm just calling it how I see it. And that's based off of the weekly chart. We've also got an imbalance up there. All right, then we have a clean high here. If price comes down and doesn't, again, I'm saying if it does not fill this entire gap from the previous candle's wick to this weekly candle's wick, even if it comes down here, right? We could see some consolidation in that fair value gap and watch the lower time frames, which would be the daily and the 4 hours, since we're using the weekly, for signs of more upside. And what is that? It's going to be displacement breaks the structure, not just something like this on a daily time frame where you get barely above the high. No, we need something like this, where it is undeniable that a larger force is at play. So if we get that, I would look to start building longs, and I would be targeting this high. Now, of course, I would use the lower time frames to do that, but you know, that's kind of where we're at. Now, the daily, we're already in this imbalance, which I thought we were drawing to. So we have a daily order block as well down here inside of this weekly imbalance. So hopefully we leave some of that imbalance for the bulls. If we don't, I would probably start to look for sales targeting the lows. But I would let the weekly candle close before I would do much here. You're welcome. No problem. Let me look at the chat. So you said, oh, everybody said Bitcoin pissing. Hell yeah, I appreciate you, Anonymous and Joel.
Casper, what do you think of Bitcoin right here? Like, do you think that we could see some potential relief on like the 1 hour or 4 hour kind of tapping into this? Like,
I mean, look, so the 4 hour, I would look at it like this. I would have a much larger, well, actually, no, that's actually, so again, the 4 hour would be the same range. Let me do this. I would look at it like, I mean, if you're going to have relief, holy shit, it is moving. But I mean, I always look at the context of the higher time frame. So, what is the daily structure? The daily structure is bearish as can be, right? This is our daily institutional structure for me. We came right to a premium and reacted very impulsively. So we do have liquidity that is remaining up here. So if we start to see reversals down here, potentially we might see some upside, right? It's very possible. But when I look at the weekly chart, because I'm going to go up and use the context of higher time frames, I see us as we have returned to a premium and shown a pretty clear desire to want to go down. So where do I think we're drawing to? I think it's 17.5. So while we are still pretty far in a discount on the weekly range, that doesn't mean that we're not going to just keep going down, because again, we've came up to a premium already. We gave the market makers opportunity to get more sales and mitigate these fair value gaps. Price showed that there was institutional order flow remaining here, moved impulsively away. Daily chart, bearish. And whenever we're this bearish in the weekly, there's no law that says we have to go back up and fill this whole fair value gap or even get into it. We came to a premium, cleared out equal highs. And I mean, look at this daily candle. Again, with the overall weekly power of 3, we see the weekly open. What did price do? It ran away from it. What did it do? Showed everybody, oh, we're breaking out long. All right. Now, this wouldn't theoretically be confirmed until we break structure down here. You can really look at it here, but if we take these lows of displacement, then you might see some form of relief. But again, once we move past that weekly open and everything is, showing us we're drawing to sell side, I personally don't think I would be looking for buys at all. Now, I'm not saying they won't happen, but I would look at them from a more lower probability perspective. Also, Trevor said, how can I join your Discord channel? If you look in the description on the video, there's a link, and you can use my code to get a free 5-day trial. And then you get a discount if you decide to stay. But yeah, I think the buys are very low probability. I wouldn't try it. I mean, I don't want to tell you that, and then it that's just the way I would look at it. The DXY looking like Bitcoin in 2020 again. I swear, DXY. Look at this. I post this on Twitter. This shit looks exactly like, tell me this doesn't look like the exact model I just told you guys to use for indices. Literally 3 drive on the fucking yearly, displacement break of structure, fair value gap. Where is price going? I say right there. We talked about this a little bit yesterday on stream. I mean, definitely these highs. This would be like if I was in a long on this, if I was just looking at this, all I saw. This looks exactly how a 1 minute chart of indices would look when I'm about to long it. And I'd long it. This is exactly what it would look like. If I had more data, it might be higher. My full target would be up there. Now, I'd be trimming because you can take the 705 of this whole range. And guess where that's at? It's up in this order block, right above that imbalance. So, TPs would be this, and this. I'd be trimming areas. So, and this is the dollar. For those who don't know what this is, the more this goes up, the more pain you're going to see across anything that's denominated by the dollar. That can be euro dollar, pound dollar, Bitcoin against the dollar, indices, literal unit, fucking orange juice futures, you name it. And yes, that's real. So you guys know. Orange juice is pumping, goddamn. Sometimes I look at these just for fun. What's oil doing? Oil coming back down. We went over this a little bit yesterday. I traded oil once and it went well. I don't know why. I just have this thing in my head where I don't want to trade oil. I think the oil's next stop is going to be that 61.82 mark. Probably much lower, but that would be the next stop. Because again, we look at it from, what is our structure? I'd say I think this was on a monthly. I did this originally, right? We had structure here, bam, went bearish. Price came down, took that, went bearish, then it went negative, but then we went bullish, right? So after we've taken all this external liquidity, equal highs, filled the fair value gap, what do we look for? A return to a discount of the range that sponsored that move. What do we look for in discount? Areas of liquidity. What do we got right here? Equal high or equal lows. It's not as complicated as a lot of people think it is. It is when you're learning. I don't mean to say that and sound like arrogant or like a prick or anything, because it is hard. It was hard as fuck for me to learn it. But I am saying that once you get it, you see it much more clearly. Let's look at ETH. ETH is so much farther away from the weekly lows. ETH's still green for the week, huh? I wanted ETH, and this is the same thing like with NASDAQ. I wanted ETH to go up into this imbalance, but there's nothing saying that it has to do that. So we look here on the 4 hour. This, I would look at this as the range, that high over there. I think it was F.O.M.C high down. So we look, what did price do? It came up back to a premium, cleared out all the internal range liquidity, all these highs, came up into this liquidity void, filled it, moved away. On that note, guys, somebody said, can I explain Bitcoin 15-minute? You chose 2204 break of structure instead of 2087 as a break of structure. So in smart money, I think there's two different almost schools of thought. I think one is like the intro, which is more swing structure and things of that, which does work. But once you start to look a little deeper and start to look at it from more I don't know another word except advanced is the way I would look at it, but a little bit more under the hood. For me, I'm just looking at indications that smart money is selling to these buyers up here. So all I need for me is a break of any low, right? And any candle that has one candle to the left that's higher and two candles to the right that's higher. That's the way I look at it. So anytime that's a shift in market structure for me. It might be, some people call it micro structure, internal structure, whatever. It would be internal here. So we got that first change of character or that shift in market structure. Now, just ticking that low wasn't enough. It had to leave a gap. It has to be that gap because that shows me that there were strong enough orders here that price moved so expansively that only one side of liquidity was offered. So there's still orders within this gap. So when price returns to it, we see it move impulsively away from it. And this would have been the ideal entry. And sorry we didn't get the ideal entry, but I didn't see it until over here. Ideal entry was right at equity open. But a lot of people, and like for instance, the swing structure here, a lot of people would have maybe said it's all the way, I don't know. I mean, on the 15-minute, I would have said probably like right here, which the same candle broke that structure too. Now, if you use closures, I guess your swing structure wasn't, still nothing had been broken, right? And your swing structure was something crazy, like all the way down here or something. But again, a lot of the times, for instance, like this method got me in up here. Now, a lot of people that wait for confirmation, they're just going to look at this order block. Now, there's nothing wrong with that, but I like getting in on the moves that create those supply and demand zones, not waiting for price to get back up to them. And there's nothing wrong with that. That I've used to trade heavily like that, but I think my advice to people that are trying to learn how to trade a little bit more, be a little more nimble, I guess, would be really start to understand displacement and try to think like a market maker, and don't think so robotic with introduction of supply and demand and a lot of the shit that these gurus are pushing, because the reason they push it is it does work, but it's not as consistent. And I think that it develops a robotic thought process because break a structure, order block. And you should have a mechanical trading strategy, but you also should have start to develop somewhat of an intuitive connection with what's going on in the market, because that's how you build a true narrative. And once you do that, you're more convicted because you're not just a robot looking for order blocks. You're thinking, if I was a market maker and I'm looking to cover some shorts or provide liquidity, generate liquidity where I can get short, how am I going to do it? Okay, well, I'm going to look at the areas where retail wants to buy. Where's that? Is double top breakout or resistance breakout. Every retail trader is looking to buy up here. Right? So whenever there's a lot of buying, I look for signs that smart money is selling to them. What is my sign? That shift in market structure. That's it. On that note, guys, I'm going to hop off here. I really appreciate you all. And we'll be on here tomorrow again at noon. Every day, except Friday, we'll be on at 4 p.m. And those are both Eastern time. So if you got any questions, feel free, put them in the comments, message me on Discord, Twitter, all that's in the bio. And yeah, until tomorrow, I will see you guys later. Peace.